Good morning, good afternoon, good evening, traders from across the globe. Welcome to Short-Term Trading Live with Oscar 697 video, baby. Yeah. These videos are going to keep coming at you till one of us don't get up in the morning, and I don't think it's going to be me. All right, traders, this video is being filmed on a Sunday. It is February 20th, 2011, and this is our weekend webinar. As you know, in the weekend webinars, we like to step things out a little bit, and instead of just looking at tomorrow's numbers, what the market might do tomorrow, we try to take a little bit broader view, a bird's eye view, and see what it might do over the next few weeks. We all know that futures trading is risky and can cause substantial financial loss. If you don't understand the game, you shouldn't be playing it. However, for you traders that do get this and do understand it, we have some things on the board in this video that I would like to talk about. Some lessons that we'll go through and see where markets move after things happen in our technical analysis. The indices, the markets are still looking very bullish, and a round of applause for that. Buy the dips, huh? Buy the dips. That's all we do, and it seems to work. So, indices looking bullish. We'll look at some charts at reasonings why. One of the things I think is happening here is that our OMNI averages are converging under the market, and the market is beginning to explode. We will look at charts that have the OMNI averages there and depict that to you. Then there are bull and bear flags in the euro and the dollar index. Traders, I came out here on Wednesday or Thursday evening, did a video for you, and put up the euro and said, look, don't be fooled by the mini bear flags in the euro. The bigger picture is it's one big bull flag. And we put out a buy recommendation for Friday. What did the euro do? Straight up out of the bull flag, and we'll look at that. Traders, if you like the analysis you're about to see in this video, come on down to my site. It's www.livewithoscar.com. Grab a free membership. Never trade alone. Memberships will cost you nothing to hang out in the chat room with me, a 29-year veteran trader and analyst, and I can help you guys figure out what's going on. So come on down. All right, so I'm not going to waste a lot of time. It is a weekend webinar, and there's some charts, a lot of charts that we need to review. So I am going to go into the chart segment right away so that you can see what I'm looking at technically, the studies I've done over the weekend. With no further ado, let's go look at some charts. Okay, traders, the first chart we're looking at this evening is the Nasdaq Weekly Bar chart. Long-term view, weekend webinar, so we look at the weeklies, not the dailies. What you'll recognize is a few things on this chart happening right now. One, we're in a beautiful parallel channel. You can see us moving straight up, a lot of room on the upside on a weekly, so there's room to move higher. Number two, back here, this was the high before the crash, 2007's high. Right here. We've bested that by weeks and weeks. We've tested it and moved higher. The real important thing on this chart, it's a theme that's going to be throughout these next few charts, is this. Our OMNI averages all came together right before the big move started, and look how far apart they usually are. A lot of distance between the averages. But they all converged, they came together, and look at the powerful move. Now, we also know this. Nasdaq has been basically the leader for the last 10, 12 months. It has led even the transportation average. It has led all the indices higher. So if the averages came together and then the Nasdaq took off our leader, obviously, if the same thing is happening in the followers, we'll see that picture, right? Let's go look at some of them. Okay, traders, Dow Jones Transportation Average, the other major leader of U.S. indices. Quite a good-looking bull market, strong as can be. This goes all the way back to March 6th lows. That was 2009 after the big crash from 2007, right? We've been in a parallel channel working straight up ever since. Look at how nicely defined this new parallel channel is in. We can move all the way up here before it runs into any resistance. Now, you see how nice it's moving along? And if you'll recognize, this leg right here is nowhere near as steep or as long as the Nasdaq, which has been leading us. Let's go now see what the averages look like on this very same chart. Okay, traders, the very same chart now, the Dow Jones Transportation Average, no changes except for I've put my averages on it, my OMNI proprietary averages. Look at how far apart they are. Look at what happens when they come together. The big move is really starting to heat up. They started to get closer and closer, closer and closer. Now they've all come together, and we're really starting to heat up just as the Nasdaq did. This is slightly longer-term analysis here, looking towards the future, and that future looks pretty bright as far as I'm concerned. Let's look at a few more charts. Okay, traders, this next chart is nothing short of amazing, and some of my omniacs that come to my classes and are at my site would recognize this chart, and here it is. It's the cash S&P. We had phase one of a rally since 666 low, and basically that was put in March of 2009. We've had a major rally. I called it phase one. Then we went into a flat. Major rally into a flat. While we were in this flat, I drew this in. It was empty. There were no bars here at all whatsoever. Just a few question marks in the word phase two. This was filled in. This was filled in. We were right here. There was no further construction of this chart. Look at how well it has filled inside of this since we drew it. This was wide open and empty. So the markets are staying exactly as Omni would have expected them to stay technically. But where on earth can you draw in the market action that's coming to be in the future and get it right unless you do it using technical analysis? A round of applause for technical analysis. No way can you make a guess like that. Let's look at another chart. It's the very same chart. Once again, the weekly S&P cash bar chart. And as you can see, now that the averages are overlaid on this chart, they're all converging. Once again, they haven't even really gotten as close together as they did in the Nasdaq. I don't think this move is halfway baked yet. I think we continue filling this in and just continue on past it. Of course, there will be dips along the way. We're looking at a weekly chart. Weekly charts always have dips. But the longer-term view here, because we're doing the weekend webinar, is absolutely higher in the S&P. Let's look at another chart. Okay, traders, moving out of the cash market and now moving into something that we trade, the E-mini S&P, the ESH11 Weekly Bar chart. Once again, just to prove the point, wonderful channel right here, right? Parallel channel, bullish as can be, moving higher since the 666 low. Now we have a secondary channel that we're moving inside of. And as you can see, it's starting to get heated up here, right? We're really starting to get a little bit of a run. Now, where do you think those averages are on the ES? Because they're different than they are on cash. Not much, but certainly different. Let's look at those averages. Okay, traders, once again, the ESH11, the weekly bar chart. And all I've done now is overlay the averages. And as you can see, we're not even completely converged yet. The beginning of this move is all that we've witnessed so far. It's the birth of the next big leg higher. Look at your weekly charts. Look at your daily charts. Look at those averages. We've been using these Omni averages for years. They usually will not fool us. So take a look at the charts. Rewatch this video if you must. And look for your parallel channels. Let's grab another chart. Okay, traders, the next chart is of the New York Stock Exchange. Oh, wait a minute. Is that the German DAX, the new owners of the New York Stock Exchange? Yes, it is. I'm still trying to get used to it. Traders, the German DAX. Here we are. Long-term bull parallel channel. Look at the support line. It keeps being held every time. These were previous highs. We've bested those previous highs on a weekly, moving smartly up in the DAX. Let's look at the DAX with those averages. All right, traders, the DAX, once again, look at this nice channel here. It actually is a parallel channel working its way straight up. Averages are converging. It looks like we will have a much higher move in the DAX, at least up here before resistance is seen. So traders, you got to keep your eyes on these weeklies. Our Omni averages are pointing towards one direction, and that is the upside. You will be buying the dips until further notice. Let's look at another chart. All right, traders, we were zoomed out looking at weekly charts for a few moments. Let's zoom it back in now and look at the daily bar chart of the euro contract, the euro dollar. I did about 3 or 4 videos in the last few days, the last week or so. All of them were about continuation patterns, bull flags, bear flags, head and shoulders, diamonds, you name it. Well, on the daily euro, there is a bull flag, well-defined bull flag. We called for a buy right here on the euro on Friday, and it worked out perfectly. Look at the explosion out of the bull flag. Now, when you say continuation patterns, as you can see, we've put in some kind of what could be a bottom, had a major rally, a pullback, breaks out of the bull flag, and should now continue higher. Another thing that caught my attention was, look at the respect being paid to my Omni average all the way through this move. It finally gets above, it stays above. When it tries to test it, it holds. It gets through for one day, comes back and holds. This average has been rock solid, created a bull flag while the average was there, being respected, and we've blown out of the bull flag as of Friday, and likely we will move higher this week. So there's your euro analysis. Traders, I know inside of this bull flag were a couple of bear flags that traders were defining and calling this market bearish. There would be one of them. Here would be another, but I don't think so. Omni did not see it that way. Omni seen this whole thing as a big bull flag, called it like it sees it, and that's exactly what it was. Once again, bravo for technical analysis, right? There's no way I can know this market's going higher the next day or the day before without the use of technical analysis and without knowing that it works well. So learn these flags and live them. Let's look at one more chart. Okay, traders, staying with the daily chart and staying with the euro-minded market, this is the dollar index, exact opposite of the euro. What kind of flag would you call that right there?
Bear flag.
A bear flag, right? You had a bull flag in euro. We have a bear flag in the dollar index. Easy to see, well-defined, and the respect around the Omni average as well is what caught my attention. I recognized the bear flag, and we made that call on Thursday for trading Friday, and look at what happened. Boom, all the way down to here. Continuation patterns work. Bull flags, bear flags, diamond formations, you name it. Technical analysis is about the best roadmap on the planet for deciding where a market will go the next day or next week, next month, next year, and so on. Traders, do your own homework, pull your own charts, make sure you define these formations for what they are and not what you think they might be. So, traders, you've seen the charts. There is my technical argument for the green Omni on the board, baby. Buy the dips. All right, so we have the green Omni. Traders, you have the reasoning behind it, right? I showed you how bullish the indices look, especially with the Omni averages. Then I showed you the flags in the euro and the dollar. If the dollar gets hit, it makes the S&P seem to be even more buoyant. So a bear flag in the dollar basically shows us that the S&P wants to continue higher. So keep your eyes open on that. Traders, one of the things I know I haven't given to you yet this year is my 2011 call, but I have some great news. I think I have some great news. I had a movie producer come in on Friday, and I think we're going to get ourselves on television. What's this? Another visit from you?
Let me tell you something.
I don't want to hear anything from you.
It's got nothing to do with the Omni 2011 call.
Well, then what are you doing here? That's all you guys
Your
want from me
mouth
lately.
got you in trouble. You called me an Indian creep.
I didn't say nothing about you.
Don't tell
What
me
is
you
this?
didn't say nothing.
Put that away.
I'm going to fix your brain.
You are? What are you going to do? Oh! Futures trading is risky and can cause substantial financial loss. We do not claim or guarantee that you will profit from the information provided.